But I guess it leads me to my old school dependence on the availability of and perhaps the art of the conversation. And so towards that end, thank you for having a conversation with me today.
Great pleasure to be here. Thank you.
You know, yesterday I had a chance to talk to Patrick Mendes. Many of you heard our conversation about growth, the markets, disruptive technology, disruptive politics, disruptive economics, and at the same time, the apparent resiliency in the travel and tourism business of hotel development, which is your bread and butter. One of the goals that he talked to me about was to have, for Accor, 500 hotels in South America very, very soon. Is that real? Can you realize that?
Oh yeah, absolutely. No doubt in my mind. I mean, we have tremendous momentum here. You know, the region's been through some tough times, but every region does. If you look at what Asia is going through at the moment, what the Middle East is going through, what Europe and America could go through, every region moves in a cycle. I think for us, what's important is to have a long-term strategy, work with our partners, support our owners, and make sure you keep working through the cycles, because we're not here, we're not a private equity fund or a hedge fund, we're not out here buying today and selling tomorrow. We're building a business over the very, very long term. I mean, I'll give you an example. I mean, Brazil, look at Brazil over the last few years, been through very, very tough times. We as a company, we doubled down. We actually doubled the pace of our development. We invested, we bought new businesses, and we continue to do that. So once you commit to a market, you commit to a market. You don't come in and out depending on economic cycles, because we're in the business of building 20, 30, 40-year relationships with our partners. You don't do that when you're cyclical and you're trying to take advantage of market timing. That doesn't work.
Although you're always involved in some sort of an internal battle, at least if you're a U.S. corporation with stock analysts and quarterly earnings.
Absolutely, but I think our business, and Patrick alluded to it yesterday, the beauty of our business, just speaking for Accor, is our diversity. We operate in 100 countries. I mean, we are the leading operator in every market outside of the US. And we thrive on our diversity. So when one market is up, the other market might be down. Overall, we'll hold our own. We've delivered pretty substantial results year on year as a result of our diversity and strong development.
Well, one of the things he talked about yesterday was a diversity of a portfolio over different regions to protect yourself from those ups and downs.
That's right.
But let's take a look at what's happening now. If you take a look at the convergence of Brexit, the US dollar, an election year, international incidents, just happened the other day in Saudi Arabia, has an impact. Look what just happened 2 days ago. They start a fire at the Saudi Arabian refinery, and U.S. airline stocks plummet.
That's right.
That has to have an effect worldwide on global travel and tourism, just because of the reaction of the incident.
No question. I mean, you'll see short-term impacts, right? I mean, you look at the impact that the trade wars between China and the U.S. is having on the Chinese outbound market, which is 180 million people growing at 15-20% a year. That has a big impact on global tourism, right? But it will pass, as will some of these events. And for me, what's important is to look at the mid to long-term trend. We are in a blessed industry. This industry is growing at between 3 to 5%, has been growing at the same pace for the last 20 years. I mean, today there's about 1.4 billion travelers. There were 300 million in the 80s. This will be 3 billion in the next 20 years. So you have to have the ability to ride out the short-term cycles and keep your eye on the prize, which is the long-term one, and this business has proven to be pretty resilient. So yes, you're absolutely right. You'll see spikes of events, whether it's terrorism or whether it's economic crisis, but you will pull through, because fundamentally, travel and tourism is a sound business. People want to travel either for work or for leisure. I mean, we were talking about, just before this, we were talking about the millennials. I mean, you ask a young person, but you know, you ask most people, particularly young people, when they have a little bit of money, what's the first thing they want to do? They want to travel. They don't want to pay a deposit on a house. They don't want to buy a car. They want an experience. And we are in the lucky place to be able to provide them an experience. And all the good work that you see being done online, making information available at your fingertips, that's good for us.
You know, I use one of the metrics is the automobiles, because Years ago in the United States, Ford Motor Company did an advertising campaign and said that the Ford Taurus, a car we don't ever want to hear from again, but the Ford Taurus was the most popular car in America. Do you know how they came up with that figure? Because of their fleet sales to Hertz and Avis. It wasn't the most popular car, they just made more sales to the rental car companies. Today, if you're trying to project your production at a car manufacturer, you have a challenge because anybody that I know under the age of 25 doesn't want one. When I was 17 years old, all I wanted was a car, right? And you would beg your dad, can I borrow the car? Today, it's Uber and Lyft, and that's about it.
That's exactly
so
right.
you take a look at that, and that's money that they're not spending there that they want to spend traveling.
Yeah.
But you mentioned the other incidents around the world that we're seeing now. I thought that the biggest indicator of how you guys basically were able to respond by going in the long term is 9/11. Because when 9/11 happened, hotels couldn't move. People stopped traveling over bodies of water. And it was a real big turn down on a global scale. The only people who basically benefited from that were the cruise lines because they could literally reposition their ships to ports in the United States that didn't even know they had ports, right? But you learn from that. And to learn from that is it's got to be the long term.
Yeah.
The other figure that surprises me, and may surprise many of you, is, and I'll start with the American market. You and I talked about this earlier. How many Americans have a passport? Anybody want to guess as a percentage of the population? No, it's 37%, which is way up. It used to be 31%. The reason why it went up 6% was they changed the rule in America that you had to have a passport to go to Mexico or Canada. That wasn't an increase in travelers the way we know them. That was an increase in truckers who needed the passport to be able just to deliver their goods and services across the lines. Here's the craziest part. How many members of the United States Congress and Senate have a passport? 42%. That's crazy. How can you make global policy if you've never left Kansas? By the way, that's a rhetorical question. Now let's segue that to a figure that Gaurav said to me this morning. How many Chinese have a passport?
This is a good question.
This is a good one.
Anyone
Go ahead,
want to
guys,
guess?
take a guess. How much? Tell them.
7%. 7%, and there's 180 million of them traveling already. So you can imagine the growth potential of that market and the fundamental impact it has on travel and tourism all over the world. And they are going everywhere.
And if you embrace the concept that travel breaks down borders and barriers, and you take a look at governments around the world and their issuance of passports, that's the best indication of all when a democracy is about to happen, when the passport numbers go up, because they get to see the rest of the world. And that's where you can, do you like that, Ken?
Yeah, that was good.
And
We should
that's
play
where
cricket.
I can only do that once. And that's where you come in, because you can take a look at that market and say, okay, in the South American region, for example, they can come here.
Yeah, no question. It's only a matter of time. They're already coming. I mean, you look at big resort destinations like Mexico, in Punta Cana, in various Central American destinations. They're there, and they are coming fast. So it's only a matter of time before they are in every part of the world. I do a bit of travel in Africa. I've been to some very remote corners in Africa, and I see Chinese tourists. So it's just recognizing who your customer is, where they're coming from, and having a product that caters for that customer, which then comes back to a brand strategy and a brand portfolio. It is follow your customer.
And speaking to that, and not to get into too many stereotypes, 10 years ago, if you looked at Chinese travelers, they traveled in groups. There was somebody with a flag, they followed them. They were not high-yield passengers. They were not high-yield travelers. They were not your FITs.
Sure.
Today, you want to see Chinese travelers? Good luck if you're going through an airport when you're departing a country and you want to get your value-added tax back. You have to stand in line behind so many Chinese travelers who have receipts the size of telephone books because they've been buying.
Absolutely.
Yeah.
No, they are fundamental to travel and tourism. And the more awareness we can have on the impact that traveler has on all of us all around the world, the better off we will be.
Now, you talk about identifying your customer and then matching the brand to that customer and that market. I'm going to read something. I wrote this down this morning. And by the way, this is not the whole list. Moxie, Motto, True, Autograph, Avid, Edition, Element, Even. I'm just getting started. there's been an explosion of brands, and the argument has been that today's customer doesn't want the uniformity of the traditional hotels. In fact, they look at it as a negative. They're looking for more personality. They're looking for more immersive experience. Is there a point of no return here, or diminishing returns, where there are too many of those brands?
Possibly. I don't think we've hit that point yet, but yeah, I don't deny that at some point in time you'll start to cannibalize, but I think we're not there yet. The reality is that the market, every market, is segmenting itself tremendously at a pace, and you just saw the presentation from Marcella. I mean, information availability has a fundamental impact on consumer taste. They know what they want, and they automatically segment and refine their taste to a particular product. And what we're trying to do as a brand and as a service provider is make sure that we have a product that is true to the customer. So let me give you an example. We launched a brand called Joe & Joe. Now that we opened the first one in Paris.
Well, what I really want to know is, what market research did you get to come up with that title?
There was actually a lot of research went into that, but I think it's a cool name.
Jim and Jim didn't work.
Joe & Joe is a good name.
Okay.
We like it, and it's working well. And it's an outstanding success because the product is true to its market, and it is focusing on the young customer, 18 to 24, and you will find 90% of the customers there within that profile. So it is then about, but it's not just about millennials. We have a product in...
Well, before you get there, let's talk about this.
Yeah.
When you're developing that hotel, what are you putting into the design that you know is a negative touch point elsewhere, but a positive touch point there?
High-value fabrics, for example. If you try and make it too luxurious, that customer will think it's pretentious. So you want to be cool, you want to be relevant, but you don't want to look expensive because that's not what they're looking for.
Minimalist?
So, yeah, absolutely. Exposed ceilings. Looks good, but it costs less.
With 20 different USB ports.
That's right. We talked about Wi-Fi being like water. It's true. I mean, the first thing people are going to do when they walk into that hotel
is crawl on the carpet looking for an outlet.
Yeah, that's right. So if you have good USB ports, you have food and beverage available, relevant to them at a reasonable price, good Wi-Fi, great ambience, good music. It doesn't cost a lot, but it's about putting it together in a package that appeals to that audience, your home, and it works. We've developed this at a tremendously competitive price, and the financial metrics are far better than an economy hotel because we're able to maximize the bed per square meter ratio tremendously and drive a much better price than you would pay in a classic hotel because we've created an ambience where people are willing to spend more.
So you're not promising something you can't deliver, and at the same time, you're not promising something they don't want.
Yeah, absolutely. And it's about coming to an understanding that only offer what's relevant. Don't go too far. Don't offer any extras that are not required. If you just have a laser focus on what your customer is looking for, you will be successful. I mean, we have at the other end of the continuum, this is kind of a product for the millennials. We went to the all-inclusive business about a year and a half ago with a brand called Rixos.
Which is a brave new world for you.
That's right. We've never done this before. Now, it's been an outstanding success. We're developing rapidly in the all-inclusive business. That is the other end of the continuum. We're squarely focused on the family market. So there is a market, and this is not about young people. This is about families and providing good value for money. And what is good value for money?
Can I give you a consumer response to all-inclusive?
Sure.
What's the one symbol that you see in every advertisement, whether it's print, radio, television, internet, that when you see that symbol, you know that the travel industry, whether it's airline, hotel, or cruise line, is about to lie to you? It's the asterisk. Because it says all-inclusive, and then there's the asterisk about all the things that are not included.
Sure.
So when you were developing this, you had a steep learning curve there to figure out what is truly defined as all-inclusive.
Sure. And I think what we've tried to do is stay very true to what we're trying to sell. When we sell all-inclusive, and because we've done it at a luxury level. So when we say all-inclusive, we really mean all-inclusive. It's not a product with exclusions. You get what you're looking for, but you have to do it in the right markets, at right scale, And again, it's a great value for money proposition for your guests, because they don't like that, exactly to your point. They don't like coming around and then being told, oh, by the way, that price that you paid, that doesn't include these 5 things.
They don't want to go to their wallet.
And that's why we took a decision to do it at the premium end of the market, because we want to deliver a product that's true to the brand promise. And the brand promise is all inclusive.
And at the same time, you have to educate the developers,
Yeah.
because it's a steep learning curve for them as well.
Sure. But I think in today's market, I would say 99% of the partners we work with are super smart. They know what they are going to deliver. We spend a lot of time working with them for them to understand what the brand stands for and the financial metric that comes with it. And they get it. They absolutely get it.
Now, as you're trying to...
Okay.
Oh, hello. Wow.
My 2 sons.
A new career.
They love their Accor Live Limited PSG t-shirts.
There you go. And is the team winning?
Well, they're doing,
fine.
doing a little bit better this year.
When you're trying to match your brand to a market and then justify the rate at the same time, give me an example of where somebody said to you, there's no way you can open this hotel in this market and make it work, and you did, and what you were up against. And then I have a second question.
I'll talk about it in terms of not one hotel, but perhaps an investment. We made an investment in Brazil about 1.5 years ago in a company called BHG. We acquired the company at probably the worst time in the cycle, but we took a decision together with Patrick and the team that we are committed to this market long term, and we intend to grow the business. And we formed a great partnership with the owners of that business, acquired it, and it proved to be an excellent decision for us over the last 2-3 years. As the market starts to come back, we're going to see the benefits of that business over the next 5, 10, 20 years. The scale that we're creating in the key flagship cities. Patrick talked about 35 hotels in Rio. A big chunk of that came from this acquisition. So it's about the whole
those
market.
35 hotels across all different price points.
Absolutely. We go from Ibis to the Fairmont and everything in between. It's, again, having relevance to your customer. When they come online, you've got a product to suit the demand, no matter what their price point and their preference.
Second question. Give me an example of where you were absolutely convinced that a brand was going to match a market and it completely tanked.
That's an interesting one. I think we went into the budget hotel business in India thinking it was a great market. It didn't work. It didn't work because what we misunderstood was the price point at which we were trying to compete, and the service that we were delivering, there was a mismatch. We couldn't deliver. When you're selling a quality hotel room in the budget segment, at that point in time, we were trying to target a $25 room rate. The customer just wasn't willing to pay that for a budget hotel room. They would rather pay $15 and get poorer service because they were totally focused on the price. We didn't understand that. So that was, in fact, a real learning curve from us.
So now you're developing a poorer service brand.
No, we decided actually to go the other way. We went up and made sure that we competed in a market segment where we could deliver a price and a product and a service at a development cost that was sensible for us and our owners. We just couldn't compete in that entry-level market.
And who is in that market?
Well, in fact, it's quite interesting. You probably have all heard of Oyo, which is an incredibly fast-growing company out of India, but now very much global, all over the world. They are probably leading the space in that budget hotel segment. They're also doing a lot of other things in co-living, co-sharing. It's a very interesting company, and I'd be watching them very carefully.
Now, with so many hotel companies focusing on luxury, because of all the obvious returns, where are you looking in this region? And when I say this region, it's not just South America. Let's go to the Americas. Mm-hmm. Throw in Mexico, the Caribbean, et cetera, where you think that there's room for growth in luxury.
I think there's growth for luxury certainly across the Americas, but our strategy for growth is a bit different depending on which market you're in. So in North America, the US and Canada, we are very much focused on luxury and lifestyle. We won't compete in the mid-scale and economy space because the reality of the market, that market's been taken by Hilton, by Marriott, by IHG. We don't have the scale to fight them in that market, just as we are absolutely dominant in that space in Europe. It's very hard for any one of them to get market share like we do. So we kind of have our respective territories, but we believe in North America, we can be a real leader in the luxury and lifestyle business. So we made an investment into a company called SPE last year, which has really fantastic brands like Mondrian, Delano, SLS, Hyde, and over 40 food and beverage brands. So that was an important acquisition for us because that gives us a great platform to develop our lifestyle business. We have now over 10 brands in the lifestyle space. Globally, we're one of the fastest growing in the world in that space. So we've identified that as an important niche for us in the North American market. Now, we'll obviously do that in Central and South America, but it changes. Central America is an important market for us. Mexico, we don't really have that strong a presence in Mexico, but we're looking at that market carefully and seeing how we can establish a stronger position. South America, for us, this is our backyard, this is our mainstay. This is, in fact, home for us. And again, I think the team, led by Patrick, who's here, together with the whole team, Abel, and the rest of the crew, they do an absolutely amazing job. Through very difficult times, we've managed to grow our business. And to the benefit of our owners, we haven't just grown it for the sake of growing. We've invested in those resources back into our business. I was just talking to Patrick this morning, and our system contribution in South America across our hotels is over 80%. I mean, that's real value that we're bringing to our owners and our customers. So it's about gaining scale, but using that scale to drive real benefit to our owners. Because the more direct business we can drive, the more efficient it is for them to operate their hotels.
Well, speaking of scale, when you take a look at Marriott with 30 brands, Hilton with 17, Hyatt with 17, you're growing by the hour. That gets into exclusivity in terms of developers. For example, using a Marriott example, if I'm a developer and I want a JW Marriott on this corner, then JW Marriott can say to me, okay, we'll guarantee you that there won't be another JW Marriott within 6 miles of you, right? But all of a sudden here comes a 4 Points and a Residence Inn. And how do you guard against that? Because you've got to be able to protect your owners.
Yeah, and it's a very good question. I don't think there's a wrong or right answer. We are in the business of growing a network. We're a hotel company that is in the business of growing a network. We have a responsibility to our shareholders as a public company. So that's what we do. But we have two types of guests. One that stay in our hotels, and the other is our owners, and we have got to look after them too. So it is always that balancing act, and I can tell you many, many times, even though we don't have an exclusivity area in some of our contracts, we will think very carefully about putting a hotel next to another existing hotel if we think that is going to dilute. So far, fortunately, we haven't had that issue. You will have sporadic issues in some markets, I don't deny that at all, but broadly speaking, on a macro basis, you don't, because the market is growing. It comes back to what I just said a few minutes ago. This business, this travel demand is growing at 3 to 5% a year, right?
Can you sustain that?
Well, that's a good question, but to me, the answer lies in the statistics. It's grown for 20 years, and it is going to grow, in my view, at the same pace, if not more, for the next 20 years, because the trend of demand generation is only going that way. People are not traveling less, they're traveling more. So we just need to make sure that we don't create competing product, cannibalizing each other, but as long as you're tapping different segments of the market and tapping what is a bigger piece of the pie, then you're balancing your responsibility towards our shareholders and our owners. It's not an easy game to play. It's a lot of relationship building. It's a lot of trust. I mean, we are in the business of building relationships with our owners, where we're going into a 20, 30-year marriage every time we sign a contract. So you've got to make sure that despite what's written in the contract, in the end, you're doing the right thing by your partner. I mean, for us, it's that simple.
You know, one of the selling propositions that any major hotel corporation has, especially now, is the reservation system. I remember the old days when somebody would open up a Sheraton, I'd say, why did you make it a Sheraton? Because of the reservation system. We wanted that. That was almost more important to them than anything else.
Sure.
Today, it's gone beyond that, and Patrick was talking about it a little bit yesterday, and that's your frequent stay program and your loyalty program. That's got to be a selling proposition to your owners because people are addicted to it.
Yeah, no question. I mean, I think the loyalty program for us is fundamental to our future, and that's why we're investing hundreds of millions into it. We think that is, you know, if you take a step back, we're in the business of being a brand manager and a traffic provider. And being a traffic provider, you can't be a successful traffic provider over the long term if you don't have a genuinely strong loyalty program. Because let's face it, the ability for us to acquire the customer is not as competitive today, and I'm speaking about global hotel companies because it's just too expensive to acquire the customer. We won't compete with Expedia and Bookings and Ctrip and the likes of that, who are spending 5, 10 times more than any global hotel company to acquire a customer. What we can do, and we can do well if we play our cards right, is retain that customer. So once that customer comes into the hotel, they should never book under any other channel except direct with us. That's our goal. And you can't do that unless you have a very strong loyalty program.
And of course, you just opened up the door to another 30-minute conversation just on the OTAs, but we won't go there today. Because
they're friends, no question.
Oh, yeah.
We work with them very well, but we each have our own strengths and we each have our own business model, and all we're trying to do is make sure we can protect our business model because it's crucial to our owners. Because if we can't successfully retain customers and bring them back to the hotel at a sensible cost, our owners suffer, and if our owners suffer, we don't have a business. So to me, that's where we have to go.
Gaurav, I want to thank you for doing this morning. Ladies and gentlemen, Gaurav Bhushan.
Thank you.
But don't leave, don't leave. We're not going to employ just walk out technology just yet. Arturo, if you're here, I'd like to invite you to the stage. Arturo, are you here? He's coming. He has a small presentation.
Ah.
You want to take this?
Well,
Take that.
thank you so much. A little present to you, in recognition for your support to the industry, and to be present with us during this SAHIC 2019.
Thank you very much. I'm honored. I deeply appreciate that. Oh, I have this. So, well, wow, I wasn't expecting this. This is very kind. But you know, this should be the team there, the Accor team that is sitting there. This belongs to them because these guys just do an amazing job. And thank you very much.